All right, and we did say that Dangote Petroleum Refinery has again announced a further reduction in the price of both diesel and aviation fuel. That's to $9.40 and $9.80 per liter, respectively. And this coming on the wake of its widely celebrated price reduction. We did get that price reduction of 1,000 naira per liter. So this is a further drop, and 940 naira. That's applicable to customers buying 5 million liters and above from the refinery, while the price of 970 for aviation fuels for customers buying 1 million liters and above. So there we have it, another crash there for the price of diesel. Definitely, I believe that's good for manufacturers and Nigerians at this time. But let's get to our first conversation now. According to the Ministry of Finance, the World Bank will in June 2024 consider and give final approval to Nigeria's $2.25 billion loan request. The loan comprises about a $1.5 billion loan in development policy financing and another $750 million in program for result financing. Well, let's drill down more on Nigeria's debt level. Joining us now is Mr. N940, co-managing partner at Commercial Partners, joining me via Zoom. Great to have you on the show. Good afternoon.
Good afternoon. Great to be here. Thank you.
Fantastic. So before we get into that, we're seeing the Dangote refinery again impacting the price of diesel at this time is now sub 1,000 naira per liter. How are you seeing this? And definitely looks like good news for manufacturers.
Definitely. Not just for manufacturers, but for Nigerians as a whole, because it's going to directly impact inflation. You have most middle-class homes that have diesel-run generators, middle class to high, to the high end of the sector of the individuals, right, who all have diesel generators at home. So if you look at that, you're going to say, well, all these people are going to have to pay less money for diesel or to power their homes, considering how poor power supply has been. So manufacturing sector, which is inflation coming down, for homes, for offices, people who all use diesel generators, definitely going to be a big plus for them.
Right. How low do you think these prices, can go? Do you think at some point we might be looking at 500 naira per liter at this rate?
Well, we have to remember that the prices are sort of indexed to what's happening globally with regards to crude oil prices. So for you to get to 500 naira per liter means crude oil prices would have to also come down pretty aggressively alongside a major further strengthening of the currency. I don't see the currency strengthening that much to let us get to, say, a 500 naira per liter. That means you're talking about currency getting to maybe about 500 naira or 600 naira to $1. I'm not sure we see that happen this year. Also not sure it's advisable for that to happen, because you most likely start to have huge pressure on the currency all over again.
All right, definitely. But let's switch gears now. Yeah, we've been talking about, what we got last from over the weekend from the IMF World Bank meetings, and definitely it was quite a busy one. And we found out from the federal government that we're getting another loan, and we're chasing at this time. But it's been described as free lunch, just about 1% interest rate. Why do you think the World Bank is giving Nigeria this loan at such a low rate?
Well, that's what concessional financing is all about. You can't get this kind of rates commercially, and you have the World Bank trying to assist certain economies. If you look at the reforms that we've undertaken, looking at even the World Bank and the IMF mentioned it in their reports that came out recently. They're happy with the way things have gone, happy with the monetary policy, and some decisions taken by government, reduction in things like fuel subsidy, increase in taxes, increase in exchange rates. So all of that basically points towards some improvement, expected improvements in the economy. And yes, you will look at it as free lunch, 1% with a 40-year repayment period, 10-year moratorium. It's fantastic. It allows you manage your repayment schedule. And at 1% interest rates, you definitely can't get that anywhere else.
Yeah, definitely quite cheap financing there. But what do you think this money will be spent on? It still has to be paid back at the end of the day.
Yes, ideally you should spend the money to either, bolster your budgetary allocations, or you use it to invest in something that ensures you get returns that would outstrip what you're paying in interest, and also ensure that you can pay back the principal amount borrowed, right? So if you look at the long date tenor of the loan, that definitely means that you should be looking at putting it in infrastructure. So roads or increasing power. Imagine what improving power supply in Nigeria by, say, about 40-50% would do for the economy. If you have that amount of increase in power supply, then you will be able to increase manufacturing output at a lower rate, and also aid them in exporting, which invariably would lead to more dollar revenues coming into the economy, and makes it easier for the government to pay back. So major infrastructure type investments that will ensure you reap the benefits, that will allow you repay this loan. Definitely not to use it to pay down FX obligations, because that doesn't necessarily bring you the kind of rewards we're talking about.
And looking at debt levels in Africa, we know debt is a major issue right now for major African economies. But aside taking on more loans at this time to help support the budget, what other sources can the federal government look at this time, or even look at developing right now?
Yeah, it's interesting you mentioned debt. When you talk about debt in Africa as a whole, we've seen a few African countries default on their debt, their Eurobonds of recent. It's going to happen with Ghana, Zambia, Ethiopia. So that tells you that one needs to really be careful with regards to, debt sustainability. But if you look at us in terms of other sources government can develop, we know that Nigeria's mainstay has been crude oil. We know that government is pushing to try and get us to about 2 million barrels per day from about the 1.3 or thereabouts, or 1.2 million barrels per day that we're at. That means they need to, first of all, tackle insecurity. But we also need to focus on not just crude alone, but begin to diversify the economy. One thing we need to look at, part of what I mentioned earlier, was to help or aid the manufacturing sector to help improve exports. Same thing with agriculture. We need to try and focus on things that we can export and that would help us bring in or grow the foreign reserves. And also look at not just exporting raw materials, but things that we've added value to. This has been said in time past. You have cocoa, and how much money do you make exporting cocoa versus exporting chocolate, for instance? By the time you go from cocoa to chocolate, you most likely make an additional 40 or 50% in terms of returns. So it makes more sense to export products that you've added value to than just the raw materials alone. So definitely looking at public-private partnerships, or even selling underutilized or non-strategic assets, like we've seen happen in Egypt, can help you bring in, more revenues to the government. Look at refineries that we've been struggling to maintain. So government can always look at selling some of them to reduce the drag that you have on government finances, and then have people who can come in, manage them, optimize value, and start to export finished petroleum products the same way we expect Dangote refinery to do.
Right, and talking about that Egypt deal with United Arab Emirates to develop a prime stretch of its Mediterranean coast, that's bringing about $35 billion, in investment into Egypt in the next a couple of months or so. But how can Nigeria replicate this exact deal, at this time?
Well, talk about Egypt is a fantastic deal, I would say. They've gone into some partnership with Abu Dhabi, Sovereign Wealth Fund. So, we basically say that Egypt more or less has a big brother. So, it would be great if Nigeria, for instance, could get a big brother who would pay us $24 billion to, for development rights, which is what you've seen in Egypt. So for us, we start to look at bit of progress made. We've seen some commitments, but we need to start seeing those commitments get actualized. We looked at, the $10 billion steel investment expected from India. We have a pending agreement, discussed with Qatar. Things like that are important. Those are the kind of things that can help stimulate. Nigeria has a huge coastline, for instance. If Egypt is being paid, for rights to develop their own coastline on the Mediterranean, what stops Nigeria from being able to offer same, for instance? Or what stops us from being able to offer things like national theatre and court, people who can come in and help us develop that side of the economy and help with the entertainment sector. So I think we have to look at large-scale type things, large-scale type developments that will stimulate economic growth, create jobs, and also attract investments. One thing that is key is not to have the previous mistakes we've seen with prior governments where people end up going to court. Nigeria signs an agreement, they renege on the agreement, you end up in court. So look at the PNI type transaction, right? Yes, we ruled as a fraud, but we should never even have been in that kind of scenario in the first place. So we need to have agreements properly reviewed so that once we sign, we know it's in the best interest of the country. I'm not going to have another executive come in and try to reverse it. You can imagine Egypt, for instance, coming down 5-10 years down the line, say they're reversing this $24 billion deal, and what kind of repercussions you would have. So we need to be able to do the same, give investors confidence to come into Nigeria, assure them that whatever they sign will be honored by subsequent governments, and right. Try and create a fantastic enabling environment for them.
Right, definitely. We're seeing the president quite busy going around the world trying to get all those investors in and tame some of their nerves at this time. Well, thank you so much. It was great having your perspective. Mr. Nnamdi Nwizu, co-managing partner at Commercial Partners. Thank you so much.
You're welcome.
All right, we'll take a break now. When we come back, we head straight to the markets. Do stay with us. This is Business Incorporated.